In 2008, I saw this news where Rakesh Jhunjhunwala had bought Praj Industries because of that news, where the government said in a phased manner biofuels will be blended into petrol, ethanol. And the one company which was doing it was Praj Industries. Another company that Rakesh Jhunjhunwala bought was Titan at a different period of time but made 3,000%. Wait, 30,000% on that one company. So the idea of this video is very simple. We'll take a large investor, extract all of his trades and simply copy it, and we'll make all our money. But in true PS style, we will talk about all the issues as well. So what are you waiting for? Let's create a grand, beautiful, amazing gem of a portfolio by copying the big boys. And the companies you should buy are, itna easy thodi hoga. Pehle like, then subscribe, and then we'll learn about something, and then we'll figure this out, okay? So this is a three-step process as always. First, we have to make sure how to track all these deals. We'll talk about that. Second, we'll talk about how to construct the portfolio. And third, I'm going to tell you about some pitfalls that you may not have heard of. So make sure you don't copy anything we do until you watch step number 3, where all will be revealed and you understand the risks as well. In step number 1, first you go to nseindia.com. Why? Because that's the truth ka ghada. That's where all the information is being recorded. It's the National Stock Exchange. So here we have this bulk deals and block deals. Basically, anyone purchasing more than 0.5% of a company shows up here in the public record. And I can switch to 1 day, to 1 week, right here, and get an entire list of the symbol, the name of the company, the client name and whether it was buy or sell, and of course, the quantity and the price. Now, the difference between a block deal and a bulk deal is simple. Bulk deal is done by retailers, a block deal is done by institutions, and how this shows up is quantity. If it's more than 0.5%, it'll show up right here. Another way to do this, let's suppose online you heard that Rakesh Jhunjhunwala has bought Titan, and you want to verify whether this is true or not. So you go to, say, a screener.in type website. I can search for Titan. Open Titan, and Titan company's details will come. Over here, move towards the investor side. You'll see promoters, FIIs, DIs, government, public. As soon as you click on public, you will see other shareholders. So over here, I can say Jhunjhunwala Rakesh, and I can see Rekha Rakesh Jhunjhunwala. Remember, these are two different entities, but it's the same. It's the same. So I'll click on Rakesh Jhunjhunwala, and I can see all of the shareholdings of that entity. Cool hack, isn't it? So step number 1 is you can use both these ways to find your favorite investors' investments, and you can write it down on a piece of paper. Now we've completed step 1. Step number 2 is called diversification, and I love this part because it makes us feel intelligent. We will select not one legendary investor, but at least 5. Once you have 5, you diversify it into their brains. And it's the best way to actually construct a portfolio. So we'll select 5 investors, we'll select 20 companies, and now we have a diversified portfolio. Simple. And finally, let's move to step number 3. Now that we've done this, we've got a list of all these companies. We have Titan, we have CRISIL, we have Maharashtra Scooter, and all these other companies. Looks like we'll also become a billionaire very, very soon. But notice one thing. Notice the entry point over here. We just bought this yesterday while we were copying them. And notice the entry point of the legendary investor. Can you see the difference? We are nowhere close to where we should be. We simply looked at the company and copied, but their entry price is completely different. Their margin of safety is so high, even if the company falls by 70%, they are still in profit from their original buying price. But we would lose our hair, our minds, and all the money we have. Now you might be thinking that these investments were done by these legendary investors a long time back, and we just bought it yesterday, so this example is over-exaggerated. But Let's look at a more recent example. About a week or so ago, there was Nazara Technologies where SBI actually purchased a large amount of this company. And let's see what we have. So over here, I can see Nazara Technologies is trading at 838 rupees. And it's been only a few days after this announcement, and you'll notice SBI had purchased it at 714. These guys can buy shares not from the open market, but from an individual or the promoter himself directly and cut the deal they actually need because it's good for the promoter also. He's getting an institution on board. If you try to copy a legendary investor, there are many things that can go wrong. Not only your risk management, how he manages his funds, information asymmetry, and also a lot of these people buy small companies where they can influence the management, or let me say, help the management to grow a little further, which you, as a small retail investor or me, can never do. For us, it should be pretty simple. Think of an index fund, think of a portfolio, just maybe don't think of copying someone, because the deal there and the deal here and the context is completely different. Another good example is Singer India. Now you notice this is a 600 crore market cap company. And we know Titan is tens of thousands of crores. We also know Rakesh Jhunjhunwala bought this company some time back. So could this mean that this 600 crore market cap could become 60,000 crores one day? Before you jump to any conclusions, take a look at this. Rakesh Jhunjhunwala invested only 2 crore rupees in it, and that represents a very small portion of his entire capital. Even if this company went to zero, I'm not saying it will, but if it did, it would not matter to his portfolio. Hence the difference in risk of what his risk is and yours. Another good reason not to copy a famous investor. If this wasn't enough, there are a bunch of other things that you may not have thought of, like buy price discount. For example, Warren Bhaiya was able to get some really sweet deals in the 2008 crash because he knew a lot of corporations and investment banks. This is something you and I would never have. There is insider edge, which is probably the same. He can understand, talk to the management, figure out what's going to happen over the next few years. And again, we may not be able to take this out from the annual reports. Then there is information asymmetry. Again, if you're hanging out with all these investment bankers, all these CEOs, maybe you have some information that you can come together, do plus and figure out what and where the industry is going and use that to your advantage. Remember, this is not illegal because the information exists. It's just that we don't know how to access it. And then we have convertible debentures, which is really interesting. If you look at the preference stack, the least preferred in terms of liquidation, giving back money to investors, is equity. The most senior is debt. So what smart investors do is that they give a loan or a debt to the company and call it a CD, a convertible debenture. Now, in case the company is doing as expected, they get their interest and they make their money. But if the company outperforms and does extremely well, and that's reflected in the stock price, maybe the stock price was expected to be at 100, but now it's at 500. They can convert that debenture into equity and they now have a theoretical higher gain because, well, they had the option. Isn't that interesting? A fixed return if the company continues to do well, but conversion to equity if the company does really well. Damn, I love that deal. But we don't have that deal. My point's very simple. A lot of us, when we start off, including me, wanted to copy a large investor and become like them. But your journey is yours. And the only thing you need to know is that India's GDP, according to the World Bank, is going from here to $10 trillion in the next 7 or 8 years. Even if we are wrong by 20 or 30%, it's still a large X. You also know that India has the youngest working population in the world, which has still not created money through salaries yet. That money is still to be created, the skill is yet to be reflected in the GDP, and that money is yet to come in the markets. What are you waiting for copying all these people? Just create a simple large cap, mid cap portfolio and hold it for the next 10 years. And one thing you should do is hit that like and subscribe button because this channel will help you get there. If you found this interesting, let me know in the comments below. Hit that like and maybe share this with a friend because a lot of us want to copy and get there quick, but actually the real way is far easier. Just buy an index fund. If you want us to create and teach you investing simple strategies over the next 10 years type deals, let us know in the comments. Tell me if you like this. See you in the next video. Siddharth, fuck off, okay? हाँ ये तो वही लग रहा है. मत करो मत करो मत करो मत करो मत करो मत करो. Oh fuck. हाल ही में नहीं.
Oh, nice.